All right, so in this session, we're talking about manufacturing accounts, right? We have a handout that I shared in the group with you guys. So we're going to go through the handout. We're going to look at some examples in the handout, and then we're going to look at a worked example, right? We're going to work alongside you guys and complete a full paper, right? So let's get going. So um, now the financial statements, so far we saw financial statements for the sole trader, right? We learned how to do the trade and profit and loss and balance sheet. The last thing we looked at was the partnership. And now we want to look at financial statements for manufacturing firms. Now, the big difference with manufacturing firms, I just rambling a little bit here, is that unlike the trading firm that is buying something to sell over. So take, for example, let's say that I am a sole trader and I am into clothes and sneakers. I am not making the clothes and sneakers. I have an outlet that I'll probably go to and I will purchase the clothes and the sneakers in bulk and I'll bring it back and I will retail it. So I will buy it at one price and then I will apply a markup to it, right? I might buy it for 100, I said for 175. I buy it for 200, I said for 250, right? I am not making the goods. So in a case like that, what we have been accustomed seeing is inventory. We'll have opening inventory, purchases, and closing inventory at the very simplest level, right? Now, some firms make the goods that they are selling, right? Take, for example, a wood workshop or furniture store. Some furniture stores actually manufacture or fabricate the furniture pieces that they sell, right? Now, this changes things a bit, especially in the trading account, and then it calls for the need of a separate account to manage the whole manufacturing process, right? Because in this type of firm that is making the furniture, they are going to have to first acquire raw materials, which in this case is going to be lumber, right? Wood of different types and sizes and stuff like that, right? Other things that you will need in making a furniture is paint and thinners and varnish and nails and wood glue and batten and fabric and things to be doing chairs and things to cover your chairs, all of that. All of these things will be considered your raw materials, right? These are the raw materials that are required to make the product. Now we need to keep track of all of these raw materials, and then there's going to be a cost attached to making these materials, right? There's a cost attached to the actual making of the product, and we refer to that cost as direct cost. So that's one of the new things that we're going to be adding in or including here, right? Direct costs are costs that can be traced directly to the manufacturing of a particular item, right? These direct costs would include three main areas. There's direct materials, which will involve the cost of your raw materials, any transport to bring in the raw materials, right? Obviously, we would have to account for things like returns if we return to the supplier the materials, right? And what we will be using is the total cost of raw materials consumed. That is similar to our cost of sales, right? Other than this direct cost for raw materials, there's direct expenses. Direct expenses refer to any expenses that is directly related to the making of the product, right? So it's not related to material, it's related to some sort of expense making the product. If you use any furniture store, let's just say that what's a good example of a direct expense, sorry? Um that's not thinking about it. Something other than materials, other than labor or wages. Let's just say that I'll study material. encouraging ones. I think in him. Trend code. I can't think of one for furniture store off the top of my head right now. Let me think. So a direct expense might be, let's say we have to get some kind of certification that to certify that the items was made in accordance to some particular, let's say some of the furniture we make in our ergonomic furniture, and there's supposed to be some sort of certification or license. And let's say there's a cost that is attributable to what we're making. I'm just making something up, right? And you charge or you transfer the cost of each one of these to each product, right? I'm just saying, I'm just trying to make up something. So it's not material, it's not labor, it's not wages, but it's an expense that could be traced directly to the making of each chair, say ergonomic chair. And I have to get the individual license or something like that to say that it is in line with some particular requirement for it to be ergonomically fit, right? That could be an example of direct expense. The thing about direct expenses, and we're not talking direct expenses here, we're talking about any type of expense, be it material, labor, wages, that can be traced to every single unit of production. Because we have two types of expenses. We have direct expenses and we have indirect expenses. Now, what's the difference? So let's say we have people working on the actual furniture. You have woodworkers working on the furniture, cutting and making the furniture itself. But then you have a supervisor who is supervising the entire warehouse, checking to make sure that the orders that come in are disseminated or distributed or allocated amongst the workers. Everybody know what they're doing. He's following up to make sure that they're doing it in the correct time. He is not actually working on the making of any furniture at all. He's supervising the people that are working doing it. His wage or his salary cannot be considered a direct expense because it is not involved in making the actual product. The woodworker who is actually building the table or the chair or the cupboard or the bed or whatever, his wage could be traced to making, if he spent 4 hours making a table, then that wage for 4 hours is directly related to the making of that table. If the supervisor supervised him for the whole day, you cannot trace that supervisor wage to that table. He was looking after all of the people in the warehouse making stuff. That's the difference between direct and indirect expenses in our manufacturing account. Direct expenses could be specifically traced to each unit of production. Indirect expenses are necessary for production, but they are not attributable or could be traced to an individual product. We also refer to these expenses as factory overheads. So this could be any general factory expenses. So the lighting, the power for the factory, general expenses in the factory, probably like to get rid of the waste, maintenance staff to clean up, the floor supervisor, right? All of these, the depreciation of the machinery, the plant, right? Indirect labor, right? Somebody that's not directly related to making the table, but they offer labor services. All of these are what we refer to as indirect expenses, right? Or factory overheads. Everybody all right with that? So far? Yes? Right. Work in progress is another term. Work in progress. You see, at the end of a particular period, we might start off building, let's just keep it simple. We're building tables, right? Tables alone is what we manufacture. At the start of the month, we'll have some tables that still need to put on a leg. It in vanishes yet, it had a paint or whatever, right? You have some that completed and you have some that 70% complete, right? Work in progress is the term assigned to units that are not yet completed. We start them, you know, right? We already put on the tabletop, we put on the legs, but somebody had to come and sand it up. Somebody had to come and paint it on thing first. They're not finished goods. Understand? That's our work in progress. Now, we will always have opening work in progress. This is the work in progress that we start the month with, and hopefully during the period of that month we finish that up, right? At the end of the month, we'll have some new tables that we started probably the day before we look into complete our books. They ain't done us yet. That's going to be our closing work in progress. So in our manufacturing account, what we have happening is we have, let's just recap what we talk about. We have raw materials, right? That's one type of inventory. We have inventory of work in progress. We have inventory of finished goods. Everybody all right to that? We talked about direct expenses and indirect expenses. Direct expenses are expenses that could be traced directly to the making of a product, whereas indirect expenses are the ones that cannot be traced but is necessary in order to get the product done. Depreciation of the plant, machinery, paying the lights and utilities in the factory, right? Maybe we have a lease for the factory, we have to pay a lease for the factory. All of these are expenses that have to be incurred or necessary to manufacture the products, but they cannot be traced on each individual product. Everybody clear on the difference? All right. All right, so let's recap some of what we talk about. So trading firms, when we are calculating in the trading account, we will have our sales minus our cost of goods sold to give us our gross profit, right? They are only tracking one type of inventory, the goods that they are buying to sell over, right? I use the example of the clothing store, right? Now, firms that manufacture their own goods, like a woodwork shop making furniture, they're going to have an entire process to produce a completed product, which could be a chair or table, right? Now, in the manufacturing firm's financial statement, we need to calculate, instead of having purchases as in the trading account or a trading firm will purchase the ready-made goods, the finished goods. They will purchase goods to sell over. In our manufacturing account, or in our manufacturing firm rather, we have to calculate what the production cost of finished goods are before we could put it in the trading account. Right? And this is necessary to find our gross profit. So let's talk about the manufacturing account. In the manufacturing account, this is where we are going to be calculating the production cost of goods manufactured, which is synonymous or similar to production cost of goods manufactured is synonymous with or similar to purchases in a trading or sole trader account. The sole trader have to purchase goods to sell it over. The manufacturing firm is not buying goods, they are making their goods. So we have our entire separate account that fits on top of the trading account. That account is necessary for us to calculate the production cost of goods manufactured. Now, the calculation involves a number of things before we could get the production cost of goods manufactured. The first thing we need to calculate is what we call the prime cost, right? The prime cost is made up of the cost of the raw materials that we use, direct labor and wages, and direct expenses. These are prime costs because they could be directly related to the making of the product. That's why we call them prime, they're upfront. We will add to that any factory overheads or indirect costs. These are manufacturing expenses that cannot be traced directly to the product, right? We refer to them as indirect expenses, factory overheads, or manufacturing overheads. Now, to these two costs that we just add up, we need to add what was the value of our opening work in progress. Remember, I told you at the beginning of the period, let's say it's at the beginning of the month, we had some tables and chairs that was not yet completed, but now they are completed. So we have to add the cost of this. We didn't add it before, right? What we actually did, and what we will do now at the end of this period, is we will subtract the cost of any goods that are work in progress, because we want the production cost of completed goods. After we complete the manufacturing account and we have calculated what is the production cost of goods manufactured, we could then go to our income statement, similar to the income statement of the trading or sole trader. The difference is that instead of purchases, You see that figure we just calculated there, the production cost of goods manufactured? That is what is going to go in purchases. Additionally, we will now be using our opening inventory of finished goods, right? Because we're going to have goods that are completed but not yet sold, right? They make tables and chairs, they put it in the showroom or the warehouse or whatever. That's finished goods, right? You have an opening stock. You will sell some during the year, you will add new stock to it, and then you'll have some remaining. So you have an opening stock of finished goods and a closing stock of finished goods. After we calculate our gross profit in the trading account, the only differences here will be, instead of writing the word purchases, we'll be using the production cost of goods manufactured brought forward, or production cost of completed goods is what will replace purchases. And we'll be using opening inventory of finished goods and closing inventory of finished goods. Once we get to the part of calculating our gross profit, right, we will then have to deduct our expenses. Now, in our manufacturing firm, we tend to categorize the expenses. We break up the expenses into 3 categories. One is administrative expenses, anything to do with administration. Rent, lights, utilities for the office, wages for the office staff, right? The other one, or the other category, is our selling and distribution expenses. This is going to be anything related to selling and distribution. Your salesman wages, right? Maybe carriage outwards, because that's distribution expenses. And then finally, any finance charges. So things like interest on or interest on loans and stuff will go under financial charges, right? Depreciation on office equipment will go under administrative expenses. Yeah? Now, some key points to consider. Inventory, right? I'm going to break down each one of these now. In a manufacturing company, they are going to purchase raw materials, right, or parts to make the product for sale. Now, at any point in time, the company's inventory is going to be made up of raw materials. We're talking about the same woodwork factory. They are wood, glue, varnish, nails. That's the raw materials. These are the materials and parts waiting to be used to assemble the chairs and tables. We're also going to have an inventory of work in progress. Work in progress are products that are not yet completed. A table that isn't paint yet. A chair that still had to put on a leg. Right? And we're going to have opening and closing for each one of these. And finished goods. This is the cost of completed goods that are ready to be sold. For each one of these inventory, raw materials, work in progress, and finished goods, there's opening, raw materials, and closing raw materials. There's opening, work in progress, and closing work in progress. There's opening, finished goods, and closing finished goods. Right? The other thing now we need to consider that I mentioned earlier is direct and indirect expenses. Direct expenses, as I mentioned, are costs that can be directly tied to the production of a particular good or service, right? Direct costs are what we refer to as variable, meaning that they change or fluctuate with the levels of production, right? Like inventory. If we produce more chairs and tables, then the cost of materials that we use to produce them will increase, right? If we produce more chairs and tables, the labor of the woodworkers working on these things is going to increase, right? They fluctuate with levels of production, right? Examples of direct costs will include things like direct labor, the workmen that working on the products, direct materials, manufacturing supplies, so the wood, the glue, right? The wages of the production staff, so long as they're working on the actual production. Fuel and power consumption that is directly related to the making of the product. Now, the direct cost is a price that can be tied directly to the production of the goods. You have to remember this. It must be traced or can be traced to the cost object, whatever it is you're making, whether it's a service or product or department. The direct cost includes materials, labor. In other words, wages, or anybody that is directly involved in making the product or providing the service. The opposite of direct costs are indirect costs, right? We also refer to this as manufacturing overheads or factory overheads. Now, these include costs such as other supplies, depreciation, utilities, the production supervisor wages, machine maintenance, wages for the cleaning staff, the wages for the crane driver, the rent and the business rates for the factory, depreciation of the plant and machinery, factory power and lighting. All of these are necessary for the manufacturing process, but they cannot be traced to each individual cost object being the unit of whatever you're making, chair, table, right? Now, I mentioned that in the profit and loss section of the manufacturing account, we are going to break up expenses into 3 categories. One is administrative expenses. So anything relating to manager salaries, secretarial salaries, the depreciation of office equipment, legal and accountancy charges, all of these will go under administrative expenses. Selling and distribution expenses will include things like sales commission, sales staff salaries, carriage outwards, depreciation of delivery vehicles, advertising, selling expenses. And finance charges will include any type of expenses incurred in providing financial facilities, maybe interest on loans, bank charges, or discounts allowed. Now, this is an example of what the manufacturing section, up until we're going to calculate the prime cost would look like. Now, we're going to switch back to, I like my full view. That's not right. Right. Use this instead for this part here. So let's look at the manufacturing account. The first part of the manufacturing account is gonna make it a little smaller. It's gonna be used to calculate what we refer to as the prime cost. The prime cost is gonna look at all of the direct expenses only. So look at this. We have the opening stock of raw materials. To that, we're going to add the purchases of raw materials. Then we will add carriage inwards. We would subtract any return outwards if we return to our suppliers. And this is going to give us an important figure. This is the cost of raw materials that is available for use or consumption, right? This is all the raw materials we have to build whatever we need to build with. Now, at the end of the period, if we go back in our warehouse and we do a stock taking and we find what the closing stock of raw material is, and we subtract this from the cost of raw materials that we had available, the difference between these two is going to give us the cost of raw materials that was used or consumed. That is what we're interested in. That is our cost of raw materials for the period. Now, once we are completed with that, right, we need to add our other direct expenses. These will be, like I mentioned, any kind of direct expense. Usually the question will specify direct labor, direct wages, right? We will add these together and this will constitute what we refer to as our prime cost. So prime cost is only made up of direct expenses, direct materials, direct wages, direct labor, direct expenses, all direct. After we calculate our prime cost, we will then add the indirect expenses, or what we refer to as our factory overheads or manufacturing overheads, to these prime costs. These are also expenses involved in manufacturing, but they're not directly tied to the making of the product. They do not fluctuate with the making of the product. If we make 0, 100, 1,000, 1,500 tables or chairs, it's not going to affect our rent, right? It's not going to affect, it might affect lighting and power, but not directly, right? Because you have other things using it as well too. Understand? So these general factory expenses, factory lighting, factory power, depreciation of machinery, depreciation of plant, Indirect labor, anybody that working in the factory but not making products. The cleaner, the supervisor, right? Floor staff, the crane driver, the forklift driver, they are indirect labor. We might have indirect materials, right? The cleaner needs stuff to clean up with. The forklift and thing need oil and gas and thing to operate with, right? Those are indirect materials. They're related to the factory, but they're not tied directly to the making of the product. When we add these two together, that's going to give us our prime costs and overheads, right? This is almost our total manufacturing costs. What we need to add to this too is the opening work in progress for that particular period, because these goods are now completed. Last year, we didn't include them because they were incomplete. They were the closing work in progress. This year, the opening work in progress is done. So I'm adding that back now to my figure of prime costs and overheads. When I add that together, I get another one. I will then subtract any tables and shares that are not completed yet. That's our closing work in progress. We can't include that in our production cost of completed goods. Right? So we subtracting that. When we subtract that cost now, because remember, why am I subtracting this cost? Because I already account for the material and the labor and all kind of things to make these things. But they're not done. So I can't carry it forward as a production cost for this period. I have to subtract that. Right? So I'll only get the true cost of production for completed goods. Right? Once I get to this point and I have the production cost of completed goods, this is what I will be using to replace my purchases figure inside of the trading account. So we will have sales, just like the trading account, minus sales returns, just like a normal trading account, giving them my net sales, just like my normal trading account. Just like the normal trading account where you'll have open stock add purchases, here we'll have opening stock, but of finished goods. It had to be the finished goods. It can't be the incomplete ones, right? So opening stock of finished goods, and we will add the production cost of completed goods for this period. Right? That's going to give us the cost of all of the finished tables and shares that is available for sale. And if we come at the end of the period now and we do a stock taking and we work out what our closing stock of finished goods are, the difference between the goods that I had available for sale and my closing stock of finished goods is going to give me my cost of goods sold, which is identical to what we would have to calculate in our sole trader business. Yeah? We subtract the cost of goods sold from our net sales to get our gross profit. And then remember I said we're going to categorize expenses. So we're starting with administrative expenses, admin salaries, office rent, insurance for the office, power for the office, depreciation for the computer. All of these will be considered admin expenses. Now look at my use of the columns. I'm using this third column as a tally column for all my admin expenses. When I tally it though, I'm putting it in a second. I will do the same for selling and distribution. Sales staff salaries, commission paid, carriage outwards. I tally it, I put in the second column. Then I'll do financial charges. I tally bank charges, interest paid, discounts allowed. I put in the second column. What I will do next is add each one of these, 5,500, 3,500, 2,000. And then I will carry it across in this third column to subtract from my gross profit. That's my total expenses now. You see, why we would want to do it like this is so that if somebody is using the financial statement, they could look and see what the total admin expenses was and what the total selling and distribution expenses was and what the total financial charges was. So you want to show that data, that information, because somebody might want to use it later on for some as a decision making tool, right? Now, once we subtract this total expenses from gross profit, we get the net profit, right? So we talk about these things here already. We want to look at our question, right? This is the question now we're going to look at. From the following, we want to look at 36.1, right? From the following information, prepare, make it a little bigger. Actually, I'll do better for it. Yes, now. I'll go in the actual textbook and pull it up. We're going to take a look at this question here. 37.1. Right? No. This is the approach that we're going to take. A similar approach that we are accustomed to. We need to go through the information provided, and we need to identify where it's going to go. When you have a question like this to do to prepare a financial statement, you're taking an extra minute or two to identify where you're going to be using each figure. So let's look at them. The finished goods inventory, this is at the 1st of April. So you want to make little notes to help you process the information. 1st of April 2016, all of this is opening stock. Right? Finished goods have to be used in the trading account. Raw materials and work in progress, this is going to be used in the manufacturing account. So I put in an M. Carriage on purchases, raw materials. This is a manufacturing account item. Sales is going to go in my trading account. Purchases of raw materials, manufacturing account. Manufacturing wages, this is going to go in my manufacturing account. Factory power, manufacturing account. Other manufacturing expenses, manufacturing account. Factory rent and rates, manufacturing account. Look at this one. Inventories at the 31st of March 2017. This is closing stock. Yeah? Raw materials, manufacturing account. Work in progress, manufacturing account. Finished goods, trading account. From the information, prepare the manufacturing and trading account of E. Smith for the year ended 31st of March 2017. So we are only doing the manufacturing and the trading account for this guy. Yeah? Let's go take a look at how we do it. So I'm going to snip this out. This is Smith. Oh. So all I'll do is now you have to learn these formats and them from right? So what it would entail is like using the handout that I sent and you practice writing it out. What we used to do was used to get a folder page and just write out the format over and over and over. So that we would learn our formats. Everybody seeing me on the whiteboard now. All right, so I'm gonna do this as an example for you guys so you can see how to do it, right? So E. Smith, you get enough manufacturing, or you usually get it from any question, right? Look at it. Manufacturing and trading account. All right. Now the columns sometimes it could be a little tricky, right? Some formats would use 3 columns, some would use 2 columns. You just had to kind of use your discretion sometimes. Most textbooks have 3 columns. I'd shared that before. But sometimes you get an exam and the booklet have 2 columns, so you had to improvise, right? So don't get overly fixated on the columns, but understand the purpose of the columns. One of them, the one to the furthest right, definitely is going to be for totals, right? And the other 2 columns are used for like summation, meaning that you're working and you're adding things up, right? Now, the first thing now we need to calculate, this is how I want you to think about the process, right? In a manufacturing account, the first thing you need to do is get a prime cost. Right? Prime cost is going to be all your direct costs. And direct costs would include things like materials, expenses, labor. So that will then be adding our manufacturing or factory overheads. We abbreviate it OH, right? After we do that now, we're going to have to come and deal with we will add opening work in progress. We abbreviate that as WIP, work in progress. Right? You're adding this, I just put in an add here. And then we would subtract our closing rate from minus. All of this is going to give us our cost of production of completed goods. Usually we'll put a carry down because you go and bring it down into a trading account. So let's do that. You always start with raw materials. So you have to start with your opening raw materials. Right now we have, let's look at the raw material items that we have, right? So you could underline some of these things. You have raw materials here as your opening inventory. You have carriage on raw materials. You have purchases of raw materials. And the other thing pertaining to raw materials is your closing raw materials, right? So check what we'll do. We'll put our opening raw materials here, right? And then we will put our purchases of raw materials. $21,340 here. Right? We have to add our carriage in, which is 321. Right? We had no returns, right? If we had returns, I would work out this here 16621 and subtract the return one time. But we don't have any returns, right? So I'll move this across here one time. So if we add this together, I'll get 614 and 6 will give more 10, 3, 4. So this is giving more raw materials available for production. Because I add whatever I buy, abbreviating production. So what I had already, opening stock. Now from this, I will subtract my closing raw materials figure. Now a good rule of habit is as you use these things off, you tick them off, right? So I'm subtracting 2,620 from this. Right, so I'll get here. 1 take away 0 is 1, 6 take away 2 is 4. And I borrow 1 from here. 10 take away 6 is also 4. 3 take away 2 is a 1, 2. This here is my cost of raw materials consumed. Because we took what we had available and we minus what remained. This is the cost of raw materials consumed. This is an important figure, right? Could actually, as this is a total figure, put it here. Right? Next, we're going to have our other direct expenses. So let's see. We will take this figure here, manufacturing wages. Right? Now had to be the people that are working on this stuff. Right? So direct labor. Right? Direct labor. Manufacturing wages, 13,280. Do we have any other? Factory power will go as an indirect expense. This is indirect. This will be indirect. This will be indirect. Right? We don't have any other direct expenses. So we're going to add these two together. 1, 4 and 8 is 12. 4 and 2 is 6 and 1, 7. 1 and 3 is 4. 2 and 1 is 3. And this is going to be my prime cost. So far we deal with this. We're going to add our manufacturing overheads now. You see how I use these these like working columns and I put in totals in this column. Right? So manufacturing overheads going to include factory power, other, I'll abbreviate it as just MAN, right? Expenses and factory rent and rates. You understand why it is factory rent and rate will go under manufacturing overheads, right? It's not directly related to making the product. It's necessary, but you can't trace it to the product. So what we will do here now is we will put, we use our second column, 6,220. Other is 1,430. And rent and rate is 2,300. And we bring this across, right? So this will give us a total figure for our manufacturing overhead. So if somebody looking at this sheet and they want to know, well, how much was the manufacturing overhead, they have a total figure, right? So 50, 6, 9, and 6 and 1 is 7 and 2, 9. Right? That's our total manufacturing overheads. Now, once we get this now, this is another one here. See a ticket? Let's add that together now. So 1, 2 and 5 is 7. 9 and 7 is 16. 1 and 4 is 5. 5 and 9 is 14. Carry 1 across 4. Now, once we get to here, everything else could go in the final column. What I'm going to do now is add my opening WIP. Right? WIP is work in progress. Abbreviating, right? So opening WIP, I come up here, opening WIP here now, 955. Because that's stuff that we didn't include last year because it wasn't finished. I adding it one time. 1 and 5 is 6. 7 and 5 is 12. 10 and 6 is 16. Carry 1 across, I get 5. And this is our 4 here. And then I'm going to subtract less closing WIP, work in progress. I'm minusing the closing WIP, which is here, because these things not done as yet. So I can't include it in my production cost. Right? They're not ready for sale as yet. Remember, you're subtracting, so this going in our bracket. 6 take away 0 is 6, 12, this will be 12. Take away 7 is 5. 15 take away 8, that give us 7. This will be a 4 here, this will be a 4 here. This is what we call our production cost of completed goods. This top part here is my manufacturing account. Now I need to go and deal with the trading part. So trading account, going and go with sales. Usually we'll subtract any return inwards. Do we have any return inwards? No. So let's take off what we use, right? Right. So sales is 69,000. We only have three items to use here. $69,830. And you know what we have to do? We have to subtract cost of sales or cost of goods sold. At the very simplest, it's going to be made up of opening inventory. And inventory we're talking about here is finished goods. Right? So that's up to the top here. Go and use this figure now, 6,724. So you could use our second column, 6,724. To this, we will add, you know, we usually add purchases. We're going to add production cost of completed goods. Right? That's what we're going here because this is our manufacturing account. So production. So we have to do the manufacturing account first, otherwise you can't complete this one. And now instead of putting carry down, we put brought down. And we put our figure we work out, 44,756. Right? 4 and 6 is 10, 2 and 7 is 2 and 5 is 7 and 1, 8, 7 and 7, 14, 6 and 4, 10 and 1, 11. Carry across 1, right? So this is goods available for sale. You had the finished goods from before, you add the new ones that they make this period, right? We reach the end of the year now and we come in and subtract our closing inventory. Of finished goods. Go back up here, look at it, 7,230. When I subtract that now, that's going to give me what we call our cost of goods sold. 0 take away 0, give me 0. 8 take away 3, give me 5. 4 take away 2, give me 2. Gotta borrow 1 from here. 11 take away 7, will give me what? 4. And now 4 here. We gotta subtract this from above. So 0. Gotta borrow 1 from here. 13 take away 5, we give me 8. 7 take away 2, give me 5. 9 take away 4, give me 5. 6 take away 4, give me 2. This figure here now is what we will be calling our gross profit. Because this is our trading account. And this is our manufacturing and trading account. Now, as we continue, we'll end up adding on the profit and loss section as well too. Right? But this just looks as a smaller, simpler question. Just for you to get the hang of the manufacturing account and the trading account. Okay?